All right, so in this video, I'm going to talk a little bit about some of the sort of basics of long-term care insurance policies. So this is more the private insurance policies. Historically, the idea of a long-term care insurance policy is relatively new. Life insurance has been around for a few hundred years now. Long-term care insurance is more the past few decades. Um, so it's a bit newer as a concept, and basically for a variety of reasons, among them being people didn't live as long, long time ago, years ago, a couple centuries ago. So that was kind of an issue, and there weren't really facilities for them, and things like that. Okay, so if you go back to the 1980s, the NAIC, which is basically an insurance company, kind of association, crafted sort of model legislation which established standards for what long-term care insurance policy should look like. So kind of prior to that point, it's sort of an open field situation where people just kind of companies were kind of creating these policies and there wasn't really sort of industry standards in place. So the NAIC model legislation in the 80s, 1980s, kind of created some standards and parameters for what it kind of should look like if adopted by states. And later, HIPAA added various requirements and protections associated with long-term care insurance. Um, and then at this point, basically, that kind of brings us to we're the current day where things are a little bit more standardized typically. And generally, there are some main characteristics pertaining to eligibility and things like that that are a little bit more common. Still varies a bit. So let's talk about that a little bit. The minimum age for purchasing long-term care insurance will vary. In some cases, you might be able to buy it when you're in your 20s or maybe even before that. But in some cases, it might be more like when you hit 40, maybe you can buy long-term care insurance. So the minimum age will vary a bit from company to company. So if you are on the lower end of that age bracket and you're looking to purchase long-term care insurance, yeah, it might behoove you to shop around a little bit. You can probably find a company that actually has a policy. It just might take a little bit more time and a little more effort to find one, but there are some different age ranges for the minimum age that you can start purchasing long-term care insurance. The maximum age is probably somewhere in the 80s. So if you are, somewhere around, say 85, 89, something like that, I mean, somewhere in there, there's a good chance that once you get up into your 80s, it starts getting harder and harder to purchase long-term care insurance. And the reason for that is basically the same reason why it's harder and harder to purchase life insurance when you start getting older and older. Basically because the probability of a payout event for the insurance company has gone way, way, way up. And so as a result of that, basically the insurance model doesn't make as much sense for them. It's not as much of a, you know, probability of you winding up. It's more in a nursing home facility or long-term care facility. It's more of it's happening, right? Or if it hasn't already happened. So generally, there's going to be a maximum age, which they just aren't going to sell policies after that point. But really, when you're purchasing the insurance, well, they're going to be more interested in essentially your physiological age. So not so much your age as it relates to your birth certificate, but your physiological age. So they're going to be looking at your health situation, health history, what kind of if you're in good shape, things like that. Your blood work looks good, potentially if they do an exam. So basically, they're wanting to know how healthy you are because the more unhealthy you are, the higher the likelihood you wind up in a long-term care facility, and therefore the more expensive that's going to be to the insurance company, and the more they're going to charge you in premiums as a result. So they're going to be looking at physiological age, a fair amount for that. Okay. Now, as it relates to that, typically when you're dealing with eligibility for long-term care insurance, pre-existing conditions are generally going to be excluded. And so if there's a pre-existing condition that could cause a long-term care situation, then that's generally going to be excluded because essentially that could create a bad incentive for you to wait until you already have a condition that's leading to long-term care and then buy the insurance. And then at that point, the model doesn't really work for the insurance company because it's they kind of need the probability of something occurring, but not like it's actually happening. And in prior videos, we talked about that. It's the same reason why you can't buy homeowners insurance in your home when it's already on fire, right? Now, in some cases, they may also have some limitations on there that There are some exclusions for things for which you perhaps get diagnosed and or treated for within a specified period of the policy starting. Maybe it's 6 months or a year or something like that, maybe two. And the idea basically would be, if you're the insurance company, you don't want a situation where people are only buying the policy after they're pretty sure they're going to wind up in a long-term care facility like imminently, because at that point, financially, it just doesn't make sense for the insurance company. So they're trying to weigh they have to get enough premiums to cover the expenses, right? So from that standpoint, there could be some exclusions there that within a certain period of the policy starting, if something arises, it's considered essentially a pre-existing condition. So probably on average for a lot of people, probably the best age to purchase long-term care insurance, assuming that the person involved is relatively healthy, is probably going to be in their 50s and to maybe early 60s. So they're kind of a little bit further along, but they're still relatively healthy. Things look good. They don't have any major health issues. And basically, that's probably sort of a sweet spot to buy the long-term care insurance. Premiums haven't gone up too much. Probably in a better position to be able to afford it because of generally higher wages from a career standpoint, things like that. So kind of typically before retirement, but still healthy, still doing well, still very active, things like that typically. Once you get past a certain point, you start having more health issues, then we've got more of the pre-existing conditions, which would then be excluded. And the health situation doesn't look as good, and so the premiums get more expensive due to that. And it just starts getting progressively more and more expensive. So ultimately, you don't want to wait too long. You want to buy it on the earlier end, but probably for most people, buying it in their 20s wouldn't make a whole lot of sense for most people. Okay. Hopefully there's a little discussion of some of the sort of the basics of kind of some long-term care insurance policies and kind of how eligibility would work and things like that has been helpful. Thank you for watching and have a great day.